Good morning and welcome to our U.S. Market Daily Outlook for September 1st, 2025. Today, the market finds itself in a somewhat neutral stance, digesting a mix of economic data. We've seen resilient GDP growth and a strong labor market, yet inflationary pressures persist, and manufacturing and services sectors show signs of cooling. The Federal Reserve's decision to maintain interest rates has largely been anticipated, providing some stability but keeping an eye on future inflation prints. Tech stocks, particularly those in the AI space like NVIDIA, continue to garner significant attention, acting as a key sector driver. Looking ahead, investors will be balancing macro data against company-specific fundamentals. For the broader market, we're watching the S&P 500 to hold above the 5,200 support level, with resistance around 5,300. Diving into the economic landscape, today's data presents a complex picture. We observed persistent inflationary pressures with CPI showing a slight increase and PPI seeing a more significant surge. However, the labor market remains robust, evidenced by strong non-farm payrolls, despite a marginal uptick in the unemployment rate. On the growth front, the final Q2 GDP growth rate surprised positively with a strong rebound, suggesting underlying economic resilience. Yet, the ISM manufacturing PMI continues to contract, and the ISM services PMI barely expanded, indicating a slowdown in these crucial sectors. The Federal Reserve, as expected, maintained interest rates at 4.5%, signaling a wait-and-see approach. From a market perspective, this mixed data fosters a neutral to cautious risk appetite, with investors carefully evaluating the path forward for growth and inflation. For NVIDIA, a strong economy underpins demand for its cutting-edge technology, despite broader sector fluctuations. Our bias remains neutral for the overall market, pending clearer economic direction. The S&P 500 has been experiencing some sideways movement following recent economic updates. While showing underlying strength from the robust GDP data, the index faces resistance as investors remain cautious about persistent inflation and slowing manufacturing. Immediate support is observed around the 5,200 level, a critical psychological and technical area. Overhead resistance for the S&P 500 is found near 5,250, where previous upward moves have stalled. Volume has been moderate, suggesting a period of consolidation rather than a strong directional conviction. The price action indicates that the market is attempting to stabilize after digesting the Fed's decision to hold rates, maintaining a relatively neutral stance as it seeks its next catalyst. Investors should monitor for a clear breakout or breakdown from this range. The Dow Jones Industrial Average is also trading in a range-bound manner, reflecting the broader market's cautious sentiment. Despite the overall economic resilience, the index of blue-chip industrials has seen limited upside. Key support for the DJIA can be identified near the 38,000 level, which has proven resilient in recent sessions. Major resistance, however, is being encountered at the 38,500 mark, preventing a sustained upward breakout. Trading volume has been somewhat subdued, indicative of a cautious trading environment where institutional investors are re-evaluating their positions in light of the mixed economic signals. The index is currently in a phase of economic rebalancing, where growth stocks are rotating against value. This suggests a period of limited volatility as the market seeks a new equilibrium. The Nasdaq Composite, heavily influenced by tech giants, has shown some tech-led weakness today, though NVIDIA's long-term outlook remains strong. The index dipped following profit-taking, but found critical support around the 18,000 level. This level is crucial for maintaining the broader uptrend. Trendline resistance is evident near 18,300, which if broken, could signal renewed bullish momentum. We've seen a slight pickup in volume on the downswings, which might suggest some cautious selling pressure. The recent economic data, particularly the slowing PMIs, could weigh on growth expectations, hinting at potential for further correction if sentiment shifts negatively. However, the underlying innovation dependency and speculative flows in AI-related stocks could provide a floor. The Nasdaq's performance will largely hinge on upcoming tech earnings and further clarity on interest rate policy. The VIX, commonly known as the market's fear gauge, is currently hovering around the 14 to 15 range. This level suggests a degree of market complacency, as investors are not pricing in significant immediate risks. The relatively low volatility index reflects the Fed's decision to hold interest rates steady, which has removed some near-term uncertainty, contributing to a more stable trading environment. However, the mixed economic data, particularly persistent inflation and slowing manufacturing, prevents the VIX from dipping much lower, indicating that underlying economic uncertainty remains. While hedging demand is currently low, any sudden shifts in inflation expectations or unexpected geopolitical events could quickly send the VIX higher. For now, the equity risk premium appears contained, but market participants should remain vigilant.
Turning our attention to NVIDIA Corporation, NVDA, the stock is currently trading around 174.28. After a recent sharp pullback, we are observing signs of a potential oversold bounce. The price has touched the lower Bollinger Band and is attempting to move back within the channel, indicating a potential reversal from extreme selling pressure. Key support for NVDA is established around the 172.00 level, which has held firm. The Relative Strength Index, or RSI, is at 39.39, nearing oversold territory, suggesting that the stock might be due for a rebound. The MACD histogram, while still negative, shows signs of decelerating downward momentum, hinting at a potential bullish cross ahead. Volume has seen a decline on the recent up candle following the dip, suggesting less conviction in the immediate bounce, but also a potential for selling exhaustion. Our bias for NVDA in the very near term is cautiously bullish for a bounce, with invalidation if it breaks convincingly below 170.00. Our latest news update on NVIDIA comes from the Motley Fool, with a headline proclaiming, "Prediction: NVIDIA will soar over the next 5 years." This article highlights NVIDIA's integral role in the ongoing AI revolution, particularly its dominance in the data center market. The core message is that NVIDIA's leadership in high-performance chips and its comprehensive software platform position it for exponential growth in the coming years. This strong fundamental outlook explains why, despite any short-term market fluctuations or technical dips, the long-term narrative for NVIDIA remains incredibly robust. The market's reaction to such news is often seen in a resilient share price, even amidst broader tech sector volatility. Looking ahead, key catalysts for NVIDIA will include further advancements in AI technology, new product announcements, and continued strong earnings reports that validate its market dominance. The near-term outlook for NVIDIA remains positive, supported by this long-term growth thesis. Thank you so much for joining me today. I look forward to sharing more market insights with you in our next analysis.